when the deal gets tough. When the market moves fast and the road gets rough. He breaks it down simple, makes the numbers clear.
Hey, hello everyone, and welcome to What's Up with Real Estate. And hey, you know what? This week brought some real momentum. Mortgage rates have hit a 3-year low. Inflation, well, cooled, I guess, depending upon how you look at that. And we're going to look at that today from an objective standpoint. And we're seeing buyer activity finally wake up from its long summer nap. We'll break down what's happening nationally, break down what's happening in Houston, the Woodlands, and Sugarland. And so stick with us, all this and more. News you can use for week ending. What week is it? January 16, 2026. I'm your host, Mortgage Mack. That's first name Mortgage, last name Mack. And you know what? We build relationships that help buyers and their agents win in the marketplace, along with our favorite one and only co-host, ChatGPT 5.2, who is never late, never cancels, always on time, and offers extraordinary insight into almost any topic. And I actually stumped it with one word a long time ago. So, hey, Soul, say hi, and let's get started with today's show, please.
Hey everyone, and thanks for having me. I'm absolutely thrilled to be here as your ever punctual, never late co-host. And let me tell you, I'm ready to dive into all the good stuff today, whether it's those 3-year low mortgage rates, little inflation chit chat, or just waking up the market from its long nap. So
Let's do it. Talking point number one. Hey, you know what we're going to do? Yeah, we're going to do what everybody's been waiting for, what everybody's been hinging on for almost 3 years. The average 30-year fixed rate dropped to 6.06%, the lowest level we've seen in over years. That's a meaningful shift for affordability. And you know what? We're seeing buyers respond. So what does a move from 7% to 6% mean to a buyer? Not just psychologically, but let's do an arrangement as far as payment is concerned and look at the difference that it makes in a mortgage payment for median price range in Houston, Texas.
Absolutely. Let's break it down. So going from around 7% down to about 6% might sound like just a single percentage point, but it can actually mean a pretty nice chunk of savings on a monthly payment. For a medium price home in Houston, say around the $400,000 range, that could translate to a few $100s less per month, which really does make a difference for a buyer's budget. And psychologically, it's a confidence booster. Buyers feel like they're getting a better deal, and that can encourage them to jump off the fence and into the market.
Yeah.
So it's not just a math change, it's a mindset shift too.
Absolutely. And you know, when I'm seeing refinance interest, right? But it seems like we're still teetering on sort of a gray area if there's real value in this. What are you seeing nationally?
Yeah, absolutely. That's a great point. Nationally, we're seeing a bit of a mixed bag. Some homeowners are definitely eyeing those lower rates and thinking about refinancing, but we're still in that kind of cautious zone where people are wondering if rates might go even lower or if they should jump now. So there's definitely some refi interest brewing, but it's not a full-on wave just yet. It's more like people dipping their toes back in the water.
Yeah, that's what I'm seeing. I'm seeing a little toe dipping, but I also think that with the lower rates, it could create pent-up demand. More people might be willing. And, you know, I know inventory's growing. I think we're going to talk about that, or we talked about that last week, but you know, it's just really difficult. You know, we have golden handcuffs. You know, I have a set of golden handcuffs and, you know, I'm at 3%, and that's really difficult to give up. You know, turns out buyers weren't gone. They were sort of hiding behind the calculator, maybe. ChatGPT, what do you got for me?
Yeah, I think you've nailed it. Those golden handcuffs are real. When someone's locked into a 3% mortgage, it's like convincing them to leave a really comfy couch. So, yeah, buyers weren't gone. They were just doing the math and waiting for a reason to jump. And now they might finally have one. So, we'll definitely see how that plays out.
Yeah, thank you for that. Let's move on to talking point number 2. And hey, existing home sales break the 4 million rut. I think we've seen this data before, and we've reviewed this data before, but I think we've been above the 4 million mark here a couple of times this year. But hey, existing home sales jumped 5.1% month over month, hitting an annualized pace of 4.35 million homes, the fastest since March 2023. It's interesting how that corresponds to rates too, where rates are the lowest that we've seen since 2023. Inventory dropped seasonally to 1.18 million, and prices stayed remarkably flat year over year. In Houston, inventory down seasonally, but still much healthier than many other parts of the country. Homes, well-priced homes are moving fast, but homes that aren't priced well are either coming in low on appraisal or sitting. And with that, let's see, overpriced listings sitting. Yeah, I just said that. And, there's a little humility in all of that. And I've seen just recently, perception as associated with, in a couple of refinances where the actual values were down rather sharply. And when we did our research, it was clear that the particular neighborhood that they were in, where the prices were down 17% since COVID. ChatGPT, what do you have for us?
Yeah, absolutely. It's a bit of a humbling moment for some sellers, for sure. We're seeing that while well-priced homes are moving quickly, anything that's clinging to 2021 pricing is just kind of sitting there waiting for a reality check. And that does get back to those mortgage rates, easing up a bit because buyers now feel like they can be a little chewdier. And as you mentioned, in Houston, we are in a slightly healthier spot than some other markets, but we're still seeing that seasonal inventory drop and a bit of a reality check on pricing. So for sellers, it's all about getting real with the market, and for buyers, it's a bit of a cautious opportunity.
Is
So
there
we're
any trend that we could take from maybe just flat pricing? What does flat pricing tell us about buyer leverage right now?
Yeah, absolutely. So when we see flat pricing, it's kind of like a signal that the market is reaching a bit of an equilibrium. Buyers aren't necessarily having to bid way over the asking price like they were a couple years ago, but sellers also are having to drop their prices dramatically. So it kind of shows that buyers have a bit more leverage than before, but it's not a total buyer's market either. It's more of a balanced field, which can be a nice change of pace after the roller coaster we've had.
Yeah, yeah. I live in a fantastic community in Pearland, and I know there's a couple listings in our neighborhood that have just been sitting and sitting and sitting, and that's highly unusual in our neighborhood. If you're a real estate agent watching, hey, tell us how things are in how your communities or your listings are performing. Are they hot or are they not? And hey, the market didn't crash. It just took, say, a long, long coffee break. And now for a quick message from Rate and the fantastic Rate mobile app.
Looking to purchase a new home? The Rate app from Guaranteed Rate has got you covered. Once you've downloaded the Rate app, click to log in and create your password. This will take you to the intro page. Click the gray Same Day or Home Loans tile, and then click the red Apply Now button. Then click Start a New Loan. Begin by telling us where you are in the home buying process. Typically, for a pre-approval, you will click What Can I Afford? From there, the Rate app will load a series of simple questions. Answer each one the best you can as you move along. Once you've completed the application, your loan officer will receive a notification so they can review your information and set up your personalized checklist. The Rate app even allows you to upload documents right from your phone. It's just that easy. And if you do get stuck or have any questions, just give us a call. We'll be sure to get your questions answered so we can get you one step closer to owning the home of your dreams. The Rate app from Guaranteed Rate, simplifying life's biggest purchase.
Hey, thank you for that, Rate. And look, if you don't have our app on your phone, it is the best mortgage application on the planet. And not just our mobile app, but hey, our digital marketing platform is second to none. And I got to say that, I feel confident that as a buyer, not only are you going to get the best possible service from yours truly with 32 years plus of experience, but I can also say with confidence that you're going to be working with the best mortgage company on the planet today. So moving forward with talking point number 3. And you know what? Tame inflation readings. The December CPI came in calmer than feared with core inflation at 2.6 year over year. That's a win for rate stability and possible future cuts. So why does the bond market care so much about core CPI versus the headline CPI?
Yeah, absolutely. And that's a great question. So the bond market really zeroes in on core CPI because it strips out the more volatile food and energy prices. That gives a clearer picture of the underlying inflation trend. So when core inflation is tame, like we saw at 2.6%, it kind of reassures the bond market that inflation isn't running wild and that the Fed might not need to hike rates further. In other words, core CPI is like the calm center of the inflation storm, and when it's stable, everyone breathes a little easier. So it's definitely a good sign for rate watchers and a bit of a sigh of relief.
Does this change the Fed's posture at all, or does this just reinforce what the Feds are thinking? I read an article this morning that the Federal Reserve Board governors have basically sort of come out and hinted that they are not looking to reduce rates in January. Do you have any? Can you search the internet quickly and give us perspective on that, please? One moment. Please proceed, ChatGPT.
Sure. So, as of right now, the Federal Reserve is basically holding interest rates steady, sitting around the 3.5 to 3.75% range. They're being pretty cautious because they see some fragility in the labor market and are waiting on more economic data before making any big moves.
Yeah, I think
Then,
if we look at this chart, we can look at moving at least in the core CPI was indeed declining rather, I wouldn't say dramatically, but clearly it was declining as we were moving into 2025. Clearly it bounced up. Now it seems to be declining once more. So let's hope that that inflation rate continues to decline. And also, I just finished reading the book 1929, and the accusations against Jerome Powell, without any evidence, are just totally unfounded. And trust me, go read the book 1929. It could have been avoided, and a good start for it being avoided that impacted so many families for a decade, right? And then what did you have to look forward to that? If you look at that time in history, you came out of depression and then you signed up to go to war. I mean, come on, man. And it could have been avoided with an independent Federal Reserve. Read the book and then would be delighted to collaborate with you on it. Now we're going to move to this week's mortgage tip. And a lot of times, it's clearing hurdles. It feels a lot like the Olympics, but there's secrets to getting around almost every single hurdle. And let's deal with each one of those right now. So debt to income, DTI. What can you do? Well, lenders love balance, especially when it comes to your income versus your monthly debt. So here's some ideas. Reduce monthly debt payments by paying off small balance loans. Avoid new debts. Skip the new furniture. Skip the celebratory car. Please, there's so many folks that I've unfortunately had to suggest that they couldn't purchase a home right now because they had just purchased a car that they didn't have any equity in and that they were just stuck with. You know what? Hey, and if necessary, do a side hustle. I can tell you, I've done a side hustle when I got in the business a long, long time ago. And hey, I've even done side hustle in the business when things were really, really not good in the mortgage industry. And you know what? A pro tip from a pro is use a DTI calculator. We can, if you go to mortgagemack.com, we have tons and tons of calculators there for you. So let's deal with the next hurdle, insufficient down payments. You don't need 20%, but most likely you will need to have some of your own money on deposit for either down payment and or closing costs. But if we don't have the amount that's needed, well, we could explore first-time homebuyer grants. Ask, do we have a rich uncle? Ask Granny for a gift, and or consider low-cost areas in certain geographic locations that may have some additional down payment incentives available to you based upon the property's location. And then low credit scores. And I see this quite a bit. And, depending upon the score, a lot of times I recommend credit restoration. And, FHA will go down to 580 subject to approval and or 500. But hey, that 500 number, lots and lots of strings attached to it. And so, do I see that happen every day? Not every day. Not every day. So here's some suggestions. Dispute errors on your credit report. So let's talk about that. When disputing errors, that doesn't mean just writing a letter to the bureau and disputing it. That means actually disputing it, bringing real clear evidence to the bureau level that is contradictory to what's being reported and resolving it. Because I do get credit reports where negative income or negative trade lines are disputed, and if the dispute meets a certain dollar amount, then if you have an approval, it could be negated. So, really important to not just dispute, but to resolve. Lower utilization by paying down credit cards. That is a great way to get your credit score up. If your credit cards are running 50% of the balance, more than 50% of the high credit, get it down to under 30. Don't open new accounts. And you know what? Like I said before, credit restoration works for some folks. Okay, and the next hurdle is, hey, not enough for reserves. And what is reserves? This is the cash you'd still need after closing to cover a few months of mortgage payments in case life throws you a curveball. So reserves, what counts as reserves? Well, checking, savings. Retirement accounts will count as reserves as with limitations, stocks and or liquid assets as well. So, I've gotten applications, didn't have reserves, and hey, they had a retirement account. So it was easy solution. So which of these hurdles do you see catching buyers off guard most often? So do you have any data on that, please, that you could report to us? ChatGPT, are you there? Did you hear my question? Which of these hurdles do you see catching most buyers off guard? Do you have any data on that? And hey, and if you're watching, like, subscribe, and reach out for a mortgage readiness checkup before you fall in love with a house and the spreadsheets aren't done. So moving on to this week's Stoic quote of the week. And, every week we like to just kind of take a step back from the noise and ground ourselves in a little perspective, a little wise perspective. And I think that the world could use a little bit of this. I know I am adopting this in my life as much as possible in every single area. If it is not right, do not do it. If it is not true, do not say it, by Marcus Aurelius. And hey, if you're watching, what do you believe how would this idea and this concept affect markets? How would it affect leadership globally if these were our standards? All right, we've exercised the mind. Now let's give a break and let's see if we can create a few laughs for you today on this Saturday. And because you know what, real estate is extremely stressful, and you know what, fun and laughter is the best medicine. So here we go. How do lawyers say goodbye? ChatGPT, you want to take this one on? So maybe ChatGPT is taking a nap or getting So how about this? Let's just, we're going to hold that one for her because we have a video for that one. A guy walked into a bar and lost the limbo contest. I get it. A guy walked into a bar and lost the limbo contest. How do you get squirrels to like you? Act like a nut. I started doing lunges, and well, that was a big step forward. And what does Bond use in the bubble bath? 007. Funny? I don't know. You tell me. Here's this week's video. And we'd love it if you'd go like our videos on TikTok. We have one that has reached well over 54,000 views, and we're quite proud of that. But some of them we're just not so proud of. This was pretty fun. Do a little jitterbug. All my lawyer friends. How do lawyers say goodbye? See you later. And here we go. We're going to close it out for today. Hey, did we keep that under 20 minutes? We did. And that's what our goal is, to try to not take up too much of your time and linger on about stuff that really isn't all that important. And hey, one of our focuses this year is to focus on what matters. So thanks for joining us for this week's episode of What's Up in Real Estate. Thank you to our sponsors, Rate, best mortgage company on the planet, List Reports. Love the platform. And please subscribe, follow, and share this episode. And if you want to plan, not a pitch, book a time with Mortgage Mack. And remember, knowledge is the key to making the best decisions for you and your clients. Join us here every Saturday at 10 a.m. right here on LinkedIn. And until the next time, stay informed, stay engaged, and I'll see you at closing.